Hi, welcome to the Market Alert for Monday the 8th of June 2015. Starting off in the 5-minute chart, you can see the market direction to the non-farm payrolls. Not as volatile as they would have expected, but there you see a 50-point range, then the market becomes sideways. Price is trading up to the 17,900, now having taken out the 18,000. And then we see this bar here, the completion of the first 5 minutes of the trading session. Big selling bar there, market comes down, you see some buying pressure coming into the market, and then the professionals buying back into the market in this bar here at 2:45, followed by the 10 to 3 bar as well, and then the 5 minutes to 3. And the 5 minutes to 3 bar is a range of 27 points, just 2 points outside of the range that we have for producing signals, which is a shame because this one went on to produce the 20-point scalp at the 17,900 and then continued on up to 3/4 of the way towards 17,950. In between this we had a second, the first PTI, as this one wasn't actually signaled, and price is only managing to fill, and then the market running out of steam, which is something I've warned about all week. This is the current pattern where the market moves up, runs out of steam because the news isn't what they expected, and then the market comes down, and this caused a loss of 50 points in this trade as the market saw the selling return in 3 consecutive bars before finding support and then trading sideways before the close of trade. And again, that pattern of once the market's had its first hour, then going into a sideways range which sets the tone for the rest of the day, and then we see Dudley speak here at 5:30, and that's all the reaction you get out of the market, and then back into the very, very tight sideways range. If you just have a look here, all we've got is a 26-point range. You need more than that for the momentum, which is what we've always traded. And the moment we've got a lack of that momentum, which is why we then get into this really tight and horrible sideways range. But again, I have warned about this over the last few weeks, that we've got this pattern of the market going up, the buying running out and disappearing, and then we get into these sideways ranges, and you can see that here, even the drift down there of 50 odd points. And then after the news, there's a pretty good indication here in the next hour. Price is trading about 26-point range, and then it gets even less. So there's a pretty good clue there to stay away. And it's also Friday evening as well. And the only reason I'm saying this is because this has been the pattern for the last few weeks. And then you see the result of this, the market just finding support at that 17,850 level, eventually breaking it, but then coming back towards the close. And you can see now the market's still playing with this one as well, coming back to it now. So even on the overnight market, still very, very quiet as this market decides what to do. And of course, at the moment we've got the G7 meeting on as well. If we have a look at the daily chart, you can see the market pulling back. And if we were to just look at the fib retracement, you can see that from this low up to this high, the market's stuck at the 76% retracement at the moment, which is where you would expect the market to trade to in a pullback, which is what we've got at the moment. There is an increase in volume at the moment as well, which is quite interesting to see. The market's certainly showing a bit more activity. Whether the professionals are buying back at this level remains to be seen. But like I say, that's probably down to the fact that we've got the G7 meeting going on at the moment. So this is from 10:15 a.m. this morning. So information can be leaked into the market during the day from this meeting. In the implied volatility, well, this is moved up with the market moving down the day, 13.22. You can see this reflected in the chart there. So we're starting to see some pressure to the downside here as the option sellers are marking up the put options on the basis that there is further downside pressure to come in this market. Right, that's it for me for this morning. I will see you in tomorrow's edition of the Market Alert. Let's hope there's a bit more activity, because the only thing we've got is the G7 meeting to be moving the markets today. And that's it then. I will see you tomorrow. Thanks for watching. See you in the next one.